Welcome to Options 101, Terminology and Basic Concepts. This is part 6 of this training series brought to you by TradeRightly.com. In the last episode, part 5, we talked about chains briefly. I actually showed you a chain in the Options Express interface. And we saw that there was some shading on this side. So we're actually going to talk about what that shading means because it's integral to our understanding. But to keep it from getting too busy on the screen, I'm going to construct a simple version of that option chain. Okay, so what does that shading on the option chain indicate? It indicates moneyness. And yes, I know that that word would not make it through a spell checker, but because it is so integral to understanding our concepts, then we're going to have to let that slide. So first, let's construct the spine of our options chain. If you remember, the options chain started with whatever the low price was and moved up. This isn't all of them, but I am just giving you some strikes below and above what the current price is. So for this example, we're going to say Apple is currently trading at $400 per share. So on the left side of our chart, we had calls, and on the right side of our chart, we had puts. Now, first I want to take a look at the portions of the chain that were not shaded, the ones that were not shaded yellow in that previous episode. When we look at calls on the left-hand side, the ones that were not shaded were the ones that had strike prices above the current price. So the current price is 400. You can see these strike prices are moving up above 400. Those were the ones that were not shaded on the call side. And these are called out of the money. OTM is the abbreviation. Now, they are out of the money because they can't be exercised for a profit. So think about this for a second. A call is the right to buy the underlying. Now, if I owned the 410 call, for example, if I owned the 410 call, that gives me the right to buy Apple for $410 per share. But I can buy Apple right now on the open market for $400 per share. That's what it's trading at. So there's no profit in me exercising this option. And that's true for anything that's above, any call that is above what the current price, what the current market price of the underlying is. There's no profit incentive in exercising that option. So we call those out of the money. Out of the money puts are on the other end of the chain, but the premise is the same. There is no profit in their exercise. If I owned the 390 put, for example, it gives me the right to sell Apple at $390 per share. But I can sell Apple on the open market right now for $400 per share without exercising my option, so there's no point in doing that. Now, if money can be made by exercising call, then that call is in the money. If I have the 390 call, I have the right to buy Apple at $390 per share. I could exercise that option, buy the stock for $390, and then immediately sell it on the open market for $400 for a $10 per share profit. I'm in the money. In the money puts are on the other end of the chart. Those are those with strike prices above the current price. If I bought the 410 put, it gives me the right to sell Apple at $410 per share, meaning I could buy Apple right now at its current market price of $400 exercise my option and immediately sell it for $410 for another $10 per share profit. Again, in the money. So just to round out our moneyness terms, the strike price closest to the current price of the underlying is called at the money. There is no different shading or anything, but at the money is when the shading switches sides of the chart. It's whatever option is closest to the current price is what we call at the money. Now, the examples I just gave you, realizing a $10 per share profit, they're not exactly accurate. I'm trying to keep it simple so you'll get the concept. In reality, the option would have cost me something when I bought it, and there are transaction costs that have to be considered, but we're going to flesh all that out later on. So that is Moneyness, and that is it for this episode of Options 101. For more information on how you can beat the pants off the market, visit TradeRightly.com.